Hello everyone, welcome to STC channel. Now I explain the important concepts related to the revenue generation of government of India, that is called as income tax. Income tax is the major resources for the government, both state government and central government. This income tax is covered under the Income Tax Act 1961. So, for clear understanding of income tax, now I am going to explain about the computation methods for gross total income. For clear understanding of gross total income, we should understand about the basic concepts related to the income tax. For example, what is the meaning of income tax? We should know what is the meaning of income tax. Then how the income tax is important to the society. After then, how this income tax is contribute to the government development. Finally, we are going to discuss about the computation of total income. Now I explain the income tax. The income tax means income tax, it is the compulsory payment made by the person to the government from their earnings. So earnings nothing but their salary, maybe house property or business profit, wages, salary, then bank interest, even the prices or gifts from the other persons. So these are all the called as the income or earnings of the individual or persons. So how this income tax is, why do pay this income tax to the government? The purpose means first is this income through this income tax government to provide the public services is the first important. Second, to develop the infrastructure. Third is for providing social welfare facilities, government need funds. Another one is national securities. That means the contributions to the defense and other even police, cyber securities and everything. Then after that, economic development. Through our income tax revenue, economic development also possible through our income tax. Then finally, to maintain the government administration for providing the basic amenities and self-securities to the society, government should maintain certain personals. That personals needs salary and everything. So these are all the importance for the income tax for the society. Next is how this income tax is important to the government. So government already I told. So income tax is a major source for the government. So through this source, the first government revenue is from the income tax. Second is development of the infrastructures. That means providing the road facilities, providing the bridge, providing the drainage facilities, providing the public utilities, that is called as water facilities, electricity facilities. Government need more funds. That funds comes from the income tax. Then next is providing the education and healthcare facilities to the public. So for providing the free education or quality educations to the society, government need more funds. That funds is available from the income tax. Another one is providing the social welfare facilities to the public. Next is national defense and security. Government wants to provide the national defense and security. Income tax revenue is required. Next is economic development. Another one is providing the infrastructure, facilities and economic growth. Next is reduction of economic inequalities. That means rich, poor. So this is the major inequalities. Through this income tax payment, rich and poor inequalities may be reduced. Next is efficient government administration. To maintain the good administration, government need more funds. This is second point. Another one is computation of this gross total income. Why this computation of total income is very essential one. For example, we are computation of gross total income. We are visiting the departmental stores. For departmental stores offering the lot of discount, cash discount, trade discount, then other buy one get one facilities. So for this purpose, before the payment of the total bill, being a customers, we should know the what are the discount facilities available, what are the offer is available, what are the buy one get one facilities available. That detail we should know for purchasing of the even products from the departmental store, like that. So if we want to enjoy the deductions, exemption, relief from the payment of the tax. For example, if we invest the money to the insurance sector, we can have a deductions under section 80C. So for this purpose, we should know the gross total income. So this is a very important point related to the to know the method of computing the gross total income. This gross total income is what are the benefits we can enjoy to calculate the taxable income. The individual or person to know the taxable income, he wants to understand and know the computation of gross total income. Then another one is to calculate income from different sources. Already I told the person may be having the income from various sources. To understand the taxable income sources, he wants to know the gross method of computing the gross total income. Next is to claim the deductions correctly. That means deduction under section 80C, deduction under section 80D, then deduction under section even 80U. So many 80 deductions available. Out of this, what type of deductions we can eligible? That calculation we can understand from this computation of gross total income. Next is to determine the tax liability. To determine the individual tax liability, we want to know the method of computing the gross total income. Next is to file the income tax return correctly. To file the correct amount or correct payment of tax means we should know the income method of computing the gross total income. Next is many for always generally the public opinion is we want to reduce our tax burden. So for planning of our tax, we want to know the computation methods for gross total income. Now I am going to explain about the what is the meaning of gross total income. Meaning of gross total income. Gross total income is the total income earned by a taxpayer under all 5 heads of income after allowing eligible adjustments, but before claiming deductions under chapter 6A of the Income Tax Act. So Income Tax Act 1961 defines gross total income means is the total income earned by the person. Person may be individual or partnership firm or HUF or joint stock companies or artificial judicial person. So whoever it is, so gross total income means the total earned by the person. So total earned by the person for all the heads of the income. For all the heads of income means gross total income consists of 5 heads of income. 5 major heads of the income. One is income from salary. Second is income from house property. Third is profit and gains from business or profession. Fourth is income from capital gain. Fifth is income from other sources. Now I explain all 5 heads of income. If we add this 5 heads of income, we can compute our individual gross total income. Now I explain each and every heads of income detail. For first is already I told for all 5 heads of income, first heads of income is income from salary. So, income from salary means we should know the first definition of the salary. Salary means any person received, that means any person nothing but the employee receive amount from permanent employer for his contribution and permanent relationship from the employer, that amount is called as the salary. The salary may be wages or dearness allowances or any type of monetary or non-monetary benefits. This salary is included in the 4 types of salary. Salary consists of 4 types. One is basic salary. That means basic salary means fixed amount determined by the employer. That amount is called the basic or permanent amount. That is called as the basic salary. Second is allowances. Allowances in case employee receive any additional benefits from employer for doing his work, that is called as the allowances. Examples for allowances: petrol allowances and tiffin allowances. It is called as the allowances. Third is perquisites. Perquisites means perquisites for providing by the employer for the purpose of motivating the employees. It is called as monetary benefit or non-monetary benefit. For examples, providing the laptop facilities and providing the computer or providing the rent-free accommodation. Then another one is house, that means rent-free accommodations. Then another one example is refrigerator. These are all the benefits in case enjoyed or received by the employee. It comes under the perquisites heading. Another one is profit in lieu of salary. Profit in lieu of salary means that means existing employee received money from past employer. It is called as the profit in lieu of salary. What is the meaning of past employer? For example, pension, gratuity, during the time of retirement, receiving any pension or gratuity, that amount is called as, comes under the profit in lieu of salary. So, as for our discussion, in case any person receive basic salary or allowances or perquisites or income from profit in lieu of salary, it is called as the salary, income from salary. This is the 5 heads of out of 5 heads of income. First heads of income. Second income, that means gross total income. For second heading is income from house property. So house property, that means any landlord receive amount from his tenant by the in the name of rent. It is called as the rental income. That rental income comes under the income from house property. In case the assessee means nothing but the person receive the income from house property. From this house property, 30% of deduction is allowed. That means standard deduction under section 24 defines 30% of net annual value comes under the deductions. So we can apply this deduction. Third type of income is profit and gains from business or profession. So generally we know that the definition of business is for any economic activity we generate any income, it is called as the business. The another name in case any trading activity, buying and selling of goods and services, it is called as the business, trade or business. In case through this buying and selling of goods and services, we assessee generate any income, it comes in the heading of profit from the business. Then business or profession. Profession means in case assessee using his intellectual or expertise idea to generate the income, it is called as the professional income, like doctor, engineers, lawyers, they are receiving the professional income. So now, so far we discussed the three types of income. One is income from salary, second is income from house property, third is income from business or profession. Fourth is income from capital gains. So for understanding of capital gains, we should know the meaning of capital assets. Capital assets means any assets, tangible assets. Example, gold or diamond or land or building. That assets transfer, that is called as a capital assets. This capital assets is transferred to another person. In case assessee generate through this transfer of capital assets by the assessee, it is called as the capital gain. That capital gain, I repeat, that capital gain may be two types of capital gain. One is short term capital gain, another one is long term capital gain. Two types of capital gain is available. One is short term capital gain, another one is long term capital gain. Short term capital gain means the person earning the income less than, that means less than 3 years of income, it is called as the short term capital gain. The person earning the income, that asset is transferred after the 3 years, it is called as the long term capital gain. It is called as the capital gain. So in case any income generated by assessee through transfer of capital assets, it is called as the capital gain. It is called as the income from capital gain. Finally, income from other sources. It is very, generally the examples for income from other sources is any bank interest, dividend or gift or any prices, that means winning prices, lottery ticket prices, it is comes under the income from another income from other sources. Then Income Tax Act 1961 defines another type of income from other sources. That means the first four heads of income, then uncovered amount of this first four heads of income, it comes under the income from other sources. What are the first four heading? Income from salary, income from house property, income from business or profession, income from capital gain. This four heads, our income is not covered, this four heads, that amount is covered in the income from other sources. So if we add these 5 heads of income, we can compute the gross total income. So whatever it is, the explanations related to theoretically, it will have a little bit confusion. So for this purpose, for this session, I prepared then example related to the assessee, gross total income. This gross total income we can prepare by the way of for examples, in case assessee having the income. This I prepared for this purpose. Assessee having the salary income. In case assessee nothing but the person or individual, maybe Ambani or Vijay or any person. Okay, here salary income. Salary income means the person receiving the 30,000 salary per month. So 30,000 into 12, 3,60,000 rupees income. Out of this 3,60,000, Income Tax Act is give the standard deduction under section 16(1)(a). 16 under section 16. So what is the standard deduction? 50,000 we can deduct from our gross salary. That amount we can deduct. So finally we have to pay the 3,10,000 rupees. It is called as the income from salary. Second is income from house property. Income from house property, our tenant, that means through our tenant we generated income. That house is 1,20,000 we earned from tenant. We can have a claim deduction under section 24. That means 30% of gross net annual value, that means annual value we can deduct. So that means out of 1,20,000, 36,000 we can deduct in the name of standard deduction. Finally we can have 84,000. It is called as the income from house property. Third is income from business. That means apart from we are receiving the salary, in case we are doing any part-time job, we are generating any income, that is we generate any income, it is called as the business income. In case business profit 2 lakhs rupees means we can include it. Then fourth heading, income from capital gain. So that means previous year assessee having a short-term capital gain covered under the securities STT means securities transaction tax. So short-term capital gain 50,000 means we can include it. Long-term capital gain on jewelry. That means in case we transfer of our jewelry or we sold off our jewelry, through this jewelry sales we earned 1,25,155 means we can include it. So totally the capital gain we can have a 1,75,155 rupees in the name of capital gain. Next is finally income from other sources. Income from other sources, we assume we can have two types of income from other sources. One is bank interest from our fixed deposit. How much? 65,345 rupees. Then in case that particular year, previous year, we can have a lottery prize. Lottery prize 1 lakh rupees means the total of bank interest and lottery prize, the total amount is 1,65,345. Now we can add this 5 heads of income. That means income from salary 3,10,000. Second is income from house property 84,000. Then third is income from business 2 lakhs. Fourth is income from capital gains 1,75,155. Finally, income from other sources we can have 1,65,345. So this accumulated or 5 hits of income, totally we have 9,34,500. It is called as the income, gross total income of an individual or person, gross total income of an individual. So through this gross total income we can apply deductions. After then we can find out the net total income. Finally we can, through the net total income we can pay the tax, we can calculate the tax liability and tax payment. So from our today's session we learn about 3 important points. One is what is income tax, then how income tax is benefit to the society, that means government, how government is having benefit from this income tax. Finally, how we, what are the methods we are using for computation of gross total income. So I am very happy to sharing my knowledge to this STC channel viewers. Thank you. Next session very soon we will discuss about the computation of net total income and tax liability. Thank you. Thank you.